Hello, everybody. I hope you can hear me okay. My name is Katie Lamador. I'm the manager of tuition programs here at Columbia. And I'm very excited to get started with this student loan workshop, the Savi workshop here. We have about 42 participants starting here. And I'm just happy to welcome Lindsay Clark here as the presenter for this student loan workshop. So I'll hand it off to to Lindsay. So,
Great. Thank you. Thank you so much. And hello, everyone, and welcome. Thank you so much for taking the time out of your day. We will hope to wrap things up in about an hour and teach you more about your student loan debt. My name is Lindsay Clark, and we can advance to the next slide, I think.
oh, sure.
Awesome. All right. So just a few housekeeping notes before we proceed. This workshop is being recorded, and any of the informational materials that we present today will be shared with you about 24 hours from now via email. So if you have to hop off early, no worries. We're going to be sending you the recording as well as additional informational materials. While we're going through this, we have a small group today. I really want this to feel as interactive as possible. So if you have any questions, I highly encourage you to put those in the Q&A. And if you need to enable closed captioning or live transcription during this webinar, I will be putting a link in the chat right now with instructions on how to enable this feature on Zoom. All right, we can go to the next slide. Great. So my name is Lindsay Clark. I am the Chief Borrower Advocate here at Savi. I'm also a Columbia grad. I went to SEPA and graduated in 2018. So it's very special to be presenting to you all here today. Do have student loan debt from my graduate degree there. I'm a student loan expert at this point. I've been working with Savi for the last 5 years and giving these presentations to communities of borrowers across the country. So I'm excited to talk to you today about how you can tackle your student loan debt. We can go to the next slide. So just a bit more about who we are here at Savi, because some of you might not be as familiar. Savi is a social impact technology startup based in Washington, D.C. We were founded by student loan experts and advocates who have been fighting on behalf of the borrower for almost a decade. And in 2017, this was the first year that borrowers could start applying for a program called Public Service Loan Forgiveness. And we're going to talk more about this program in more detail in a little bit. But all to say that about 100,000 borrowers applied for this program and 99% were rejected. And there were a lot of sort of administrative, bureaucratic hassles that came along with the program. And so our co-founders saw this and decided to do something about it. So they developed Savi as a technology service and a platform to help borrowers like you and like me not only better understand our student loan debt, but to navigate successfully from start to finish around some of these super complicated and overwhelming programs. But along the way, our goal is to make the experience of having student loan debt a better one, because I think we can all agree that it sucks. And so our goal is to try to minimize your monthly payment as much as possible and really maximize that forgiveness. We're a registered public benefit corporation, which means it exists in our mission and charter to serve the public benefit. And that's exactly why we do things like this here today, because we firmly believe that when borrowers are better educated and more informed about their debt, they are more empowered as consumers. All right, we can go to the next slide. Great. And so that brings us to why we're here today. So we have teamed up with TIAA and Columbia University to be able to bring you a benefit that will help you tackle your student loans and more specifically navigate this program called Public Service Loan Forgiveness, which by the fact that you are all employees of Columbia University, you are all eligible for. And this is a powerful program that can help relieve the entirety of your student loan debt. But again, it's a bit difficult to navigate on one's own. And so that's exactly why we're here, to be able to show you the tool and services that we have and we're going to provide to you so that we can make this whole process easier. You can go to the next slide. So what exactly does that look like? Well, we try to simplify and digitize the entire process. There are a lot of applications and paperwork that goes into this. So we try to pre-fill, digitize that. We have a whole DocuSign integration. This makes it really easy for you to get those forms signed off and get submitted to your servicer without any issue at all. And on average, Savi users are able to reduce their monthly payment by about $150 a month and receive an average amount of forgiveness of around $20,000. And so you can kind of think of it almost like a TurboTax for your student loans. There's sort of one application that you fill out. We're asking you all the questions, and then all the applications that you would need to, all the forms are going to be submitted on your behalf. All right, we go to the next slide. All right, so for today, the next sort of, let's say 50 minutes or so, our goal is to have you guys leave knowing the following: the federal programs that are available to help you all right now, how Savi can make those programs work for you, and what you need to get started today with this benefit. Go to the next slide. All right, so first up, we're going to sort of take you through a student loans 101. This is sort of the basics of the things that you need to know about your student loans. Like I said, I'm a borrower myself. These are certain things that, might not have been obvious. No one taught you this when you took out these student loans, but it's important to be able to understand these things, especially when thinking about your qualifications for these programs and things like that. So we're going to go through student loan servicers, what they are, what role they play, the different types of federal student loans. So there are different types of federal student loans out there, not just federal and private, but different types of federal student loans. And the type of federal student loan that you have is actually going to determine your eligibility for some of these programs. We're going to talk about income-driven repayment plans. This can be a powerful way to lower your monthly payment. And then we are going to cap things off by talking about public service loan forgiveness. Again, this is a powerful program that can help basically forgive the remainder of your loan balance tax-free. All right, we can go on to the next slide. All right, so first up, let's understand your student loan servicer. So these are companies that you see on your screen: Great Lakes, Nelnet, Mohila. These companies are contracted by the Department of Education in the repayment and management of your student loan. All right. So these are the companies that you will log on to that website, set up that auto debit, right? Make that payment to. They are basically contracted in the management and payment, again, of that student loan. Now, just to clarify, Savi is not a servicer. So you never start like making a payment to Savi. You can kind of think of Savi almost like an intermediary or an advocate on your behalf. So we might do things like submit an application to your servicer on your behalf, or we might get on the phone with you and your servicer to resolve an issue. But we're never going to replace that servicer. You're always going to have that federal servicer. It's important to know what federal servicer you have, because over the last couple of years, there have been some changes with federal contracts, and some of the biggest federal servicers out there have actually ended their federal contracts. And what that's meant for any borrower that was serviced by that entity is that they moved to a different servicer. So, there's obviously been a payment pause in effect for the last 3+ years. When a lot of borrowers went back into repayment this month, this October, they might have been surprised to know that they had a different servicer than they did before. All right. So it's important to know what servicer you have. You can find this information out by going to studentaid.gov. Studentaid.gov is the official Department of Education website where you can learn all of the information about your student loans, but more specifically, where you can see exactly what your federal servicer is. All right, we can go to the next slide. All right, great. So now we're going to talk about the different types of federal student loans. And these three primary types are in sort of the green, the shaded green area here on the left. And then we're going to talk a bit about private loans as well. So let's start out with direct loans. So the direct loan program began around 2010. So if you have a student loan dispersed from 2010 to present day, there's a very good chance that it is already a direct loan. The easiest way to tell if it's a direct loan is it will literally say the word direct in that loan title, or DL, which stands for direct loan. It can come in the form of direct subsidized, direct unsubsidized, direct consolidation, right? Now, the great thing about these direct loans is that they are pretty much eligible as is for all of the programs we're going to talk about today, all right? So if you have a direct loan, you are in the clear. All right, let's move on to talk about FFEL loans, FFEL loans, which stands for Federal Family Education Loans. This was the loan program in existence prior to direct loans. So if you have a loan that was dispersed before 2010, there is a good chance that it could be a direct loan. I'm sorry, a FFEL loan. Now, here's the thing about these FFEL loans, and they come in the form of FFEL subsidized, FFEL unsubsidized, or even FFEL consolidation. These FFEL loans need to go through a corrective process called consolidation, okay? So a borrower with a FFEL loan, if they want to be eligible for programs like income-driven repayment and public service loan forgiveness, need to consolidate that loan into what's called a direct consolidation loan. And this consolidation it's not refinancing, it's basically a free federal process by which you are creating a new loan. They need to do that in order to be able to be eligible for these programs. So if you have one of these older loan types, you're going to want to consolidate that loan. All right, moving on to plus loans. So plus loans come in two varieties, parent plus loan and grad plus loan. All right, so let's start out with parent plus loans. Many people think the student debt crisis is a young person's problem or a millennial issue, but when in fact, the fastest growing demographic of student loan borrowers is actually ages 50 plus. It is parents taking out loans for their kids. And that's exactly what a parent plus loan is. It is a loan taken out by a parent on behalf of a child, but in the parent's name, right? Now, these parent plus loans, just like FFEL loans, can become eligible for these programs, but they need to be consolidated. Okay, so just like that FFEL loan, you're going to need to consolidate that parent plus loan into what's called a direct consolidation loan, and that will make it eligible for these programs. Now, grad plus loan, as the name might imply, is a loan taken out or given to graduate students or professional students. And the good thing about these loans is that they are eligible as is. They require no corrective action in order to become eligible for these programs. So if you have a grad plus loan, you are eligible as is. So if already you are thinking, wow, that's a lot of acronyms, this is a little confusing, all these sort of ins and outs, you're absolutely right. This is what makes some of these programs very difficult to make sure that you're abiding by. And that's exactly why we're here today. Now, last but not least, I just wanted to touch a bit on private loans. Of all the student loan debt out there, right, about 90% is federal, so only about 10% is private. And private loans, right, so these are loans that are obviously non-federal. They are dispersed or issued by a lender such as a bank, a credit union, maybe even your state agency or school, right? Unfortunately, these private loans are not eligible for any of the federal relief, repayment, or forgiveness programs we're going to talk about here today. They are just not eligible. And there's no corrective action like consolidation to make them eligible. So I know myself included, many borrowers have a combination of federal and private loans. And so unfortunately for those private loans, none of the programs we're going to talk about here today are eligible. All right, we can go to the next slide, please. All right, great. So now we're going to talk about income-driven repayment plans, or IDR. So this can be a powerful way to help lower your monthly payment. So you can kind of think about repaying your student loans in two ways. There's what's called the standard plan, and this is what everyone is automatically put on to when they graduate. And this plan basically calculates your monthly payment based on your debt amount. All right, so the higher your debt, the higher your monthly payment. Now, for someone like me who has a little over $200,000 in student loan debt, so hopefully that makes some of you feel better about your own situation. For someone like me on a standard plan, that would come out to a little over $2,000, or I'd say $1,500 a month or so. Now, that's very unaffordable for most student loan borrowers out there. And so that's why the Department of Education introduced what are called income-driven repayment plans. And these plans, instead of basing your monthly payment on your debt amount, they base it on your income. So you could have $500,000 in student loan debt. It wouldn't matter. If you are making under $30,000 a year, let's say, you qualify for a $0 monthly payment. All right. It's sort of a sliding scale from there. So they basically cap your monthly payment based on your income and your family size. Generally, these payments are capped at anywhere between 10 to 20% of what's called your discretionary income. So just to give you an example, let's say you are single, you file your taxes as a single person with no dependents, and you have an income of around $52,000. That's going to come out to around $160 a month, right? And again, some low-income borrowers can be approved for as low as $0 a month on some of these income-driven repayment plans. Now, there are 4 primary types of income-driven repayment plans. There's what's called SAVE. This is the new plan that was just introduced this year. It is formerly known as Repay. So if you were on the Repay plan before, you're going to be automatically put on to SAVE. There's the Pay as you earn. IBR, which stands for income-based repayment, and ICR, which stands for income contingent repayment. Those are all just simply different types of income-driven repayment plans. All right, now here's the deal with these plans. After you've been paying on them for 20 to 25 years, you are actually eligible to have those loans forgiven. This is a different forgiveness program than public service loan forgiveness. It's a different forgiveness program. But this is, again, a way to, if let's say you weren't working for Columbia or a qualifying institution, a way to potentially have those loans forgiven. Now, the process for enrolling in an income-driven repayment looks like this. There is an application in which you must attach supporting documentation attesting to your income. Now, this can come either in the form of your most recent tax return or a pay stub from the last 90 days. All right, so either or is acceptable. That gets submitted to your servicer. Your servicer reviews that and says, okay, Lindsay, you're going to be paying $150 a month. And it locks that in for the next 12 months. 12 months comes and goes, and you have what's called a recertification deadline. And by that deadline, you need to submit that application again with updated documentation. And that should basically reevaluate your payment amount. So from year to year, you might be paying a different amount based on any fluctuations in your income on this program. All right, I think we can go to the next slide. All right, now we are going to dive into public service loan forgiveness. All right, so public service loan forgiveness, or PSLF, is essentially full forgiveness on the remainder of your loan balance, whatever that may be. It could be $5,000, it could be $500,000, it doesn't matter. Tax-free, so there are no federal tax implications here. After you have made 120 qualifying payments. Now, what exactly constitutes a qualifying payment really comes down to these 3 things that you see on your screen right here. All right, so number 1, you have to work for a qualifying employer. All right, so that is any government organization at any level, federal, state, local, or tribal, or any non-for-profit 501c3. Columbia University is a qualifying employer. The only stipulation here is you must work a minimum of 30 hours or more per week. Okay, that's the only stipulation. Now, if you work part-time, let's say at Columbia, and maybe part-time at another university or another qualifying institution, you can combine those part-time employments to be able to qualify. So you don't just need to be full-time at one institution, you can combine part-time employment in order to be eligible for this program. Right? So that's number 1, qualifying employer. So while you're working for a qualifying employer, you also need to have number 2, qualifying loan type. All right, so a qualifying loan type is a direct federal loan. And this is one of the reasons why I made a big deal about sort of loan type a couple of slides before. So you need to have a direct federal loan. If you don't have a direct federal loan, let's say you have an older loan type like a FFEL loan, or maybe you have a Parent Plus loan, you're going to need to consolidate that loan into a direct loan in order to qualify. All right, so that is qualifying loan type. And then number 3, you need to be repaying that loan on a qualifying repayment plan. And the only types of repayment plans that qualify are the plans we just talked about, which are called income-driven repayment plans. So you need to definitely be on one of those. And you need to be making that payment on time for the full monthly amount. So you basically need to satisfy all 3 of these things simultaneously and make 120 of them in order to qualify for this program. We can go to the next slide. All right, so just to clear up a few misconceptions about this. So first of all, these 120 qualifying payments do not need to be consecutive. They just need to be cumulative. You need to reach 120 total cumulative payments in order to qualify. So let's say you worked 2 years at Columbia and then went to go work in the private sector or took some time off. Nothing happens to the credits you accumulated during your time at Columbia. They simply pause. And then if you were to ever resume working for a qualifying employer, doesn't have to be Columbia, it could be anywhere, you can resume accumulating those credits. So you just need to get to 120 total. However, you can only receive one qualifying payment credit per one calendar month per one payment, meaning you cannot double up on payments in a month and get double the amount of credits. In any given calendar year of 12 months, the maximum amount of PSLF credits you can receive is 12. So if you have to get to 120 total, you can only receive 12 a year. You all are very smart people. That's 10 years minimum before you'd be able to receive forgiveness under this program. And again, that would be if you were doing it consecutively, which you don't have to, right? Now, again, they don't need to be consecutive, just cumulative, all right? Extra payments do not count, okay? So you really, it's one payment per month. You're only gonna get one payment for that month, okay? And you just need to make 120 total, satisfying those three requirements: your loan type, your repayment plan, and your employment. All right, we can go to the next slide. All right, so how do you apply for this public service loan forgiveness? Well, the good thing is that there's one form and one form only. It is called the PSLF Employment Certification Form, or ECF. This form needs to get signed off by you, the borrower, and then it needs to get signed off by your employer, current or any previous employers you might have had. This program is entirely retroactive. It goes back to October 2007. So any qualifying employment that you have had from October 2007 to present day is fair game. So let's say you've worked for 4 universities over the course of that time. You would need to fill out 4 of these forms. All right, so signed by you, and then it goes and gets signed by your HR, and then it needs to get submitted to MOHELA. MOHELA is the servicer, federal servicer in charge of this program. All right, it is the sole servicer in charge. Those forms get submitted to MOHELA, they review, and then they award you those credits. So that's essentially how this works. Now, it's highly recommended, but not required, but highly recommended that you submit this form every 12 months. All right, that way you are basically certifying 12 months worth of credit over 12 months, inching your way closer to that 120. All right, we can go to the next slide. All right, we are going to take a quick pulse check. Let me see, I saw a few questions come through in the chat. All right, let's see here. If we have a loan from Columbia and federal loans, is there any way to have the private loan considered in the payment calculated for IDR or SAVE? Unfortunately, the private loan cannot be calculated in that. It would just be the federal loans. All right, someone else asked, how do we make sure we take out for our children a federal loan? Are there qualifications? So when it comes to taking out loans for your children, you can take out what's called a Parent Plus loan, or the child can take out a loan in their own name. So that is up for you to decide, but those are sort of basically 2 options when it comes to federal loans. All right. Can I talk to an individual counselor? Absolutely, yes. And I'm about to get to that part in just a little bit here. I'm going to show you how you can utilize the Savi service to basically help you with all of your student loan needs and talk to an individual counselor. Does this apply to spouses? Absolutely, yes. This benefit is available for you and your spouses. All right, let's see here. I'm a PhD student working for Columbia for 5 years. Would I be able to use the 5 years towards the public loan forgiveness? Yes, so long as you had debt during those 5 years, or I should say student loan debt, and so long as you weren't in an in-school deferment on that debt. This is important because many people often go into an in-school deferment while they are currently pursuing grad school or what have you. And unfortunately, that status does not qualify you for that period of time. So Savi is happy to help you look into what status exactly you are on, but you absolutely can qualify during that period of time, so long as you're working 30 hours or more a week. All right, let's see. Can you be on an income-based repayment while in school? Yes, absolutely. If you are in school and wanting to, let's say you're working and you want to get credit for that time towards public service loan forgiveness, you can absolutely be on an income-based repayment plan. I'd actually highly recommend it. All right, last question, then we're going to continue moving along here. What if I've worked for Columbia and paid off earlier loans and took a new loan? Will I get credit? So on the older loans that you paid off, that's sort of, said and done. There's nothing that can be done there. As far as the new loans, you absolutely can qualify for forgiveness, but it will basically start from the point the loans were dispersed and you went into repayment. All right. So when you went into repayment on those loans, that's when you will basically, that 10 years will essentially start. All right. I think we can go to the next slide. Great. Okay. So a few last things that we're just going to talk about are some of the major policy updates that have been going on. Whether you've been paying close attention or not to the news, a lot has been changing in the world of student loans, and I want to make sure that you are all aware. So first and foremost, this is the big one, payments have resumed. So the payment pause that was in effect dating back to March 2020, right, when the CARES Act went into effect right at the height of the pandemic, that got extended several times and is now over. And all payments have resumed on federal student loans. And those payments were supposed to start back up in October. So you likely would have received a bill already that was for an amount due sometime in the month of October. All right. And interest started resuming back in September, on September 1st of this year. Okay. Now, again, your federal servicer, that MOHELA, Great Lakes, whatever it may be, should have communicated that with you. All right. And if you're not sure who your servicer is, you can go to studentaid.gov to learn that information. Now, one of the biggest opportunities I want to make sure that you are all aware of is that the months during the payment pause, so from March of 2020 through what basically was the end of August of this year, right? So that's 43 months, I think, if I'm doing my math right, total. Each one of those months that you didn't have to make a payment counts as a qualifying payment credit, right? Qualifying PSLF credit towards the 120 total that you need to achieve full forgiveness on your loans under the Public Service Loan Forgiveness Program. So that basically means that if you've been working for Columbia or anywhere else that qualifies since at least March of 2020, you are going to be a third of the way closer to full forgiveness without having to pay a dime. That is huge, okay? Because normally under this program, you need to make a payment in order to qualify, all right? So again, this is a really, really big deal. I want to make sure everyone is aware of that. So the entire period in the payment pause counts as credits towards forgiveness. So most of you should be basically a third of the way closer to full forgiveness without having to have paid a dime, right? I know I see some of you marking in the chat, like that's great. Absolutely, many people are unaware of this, so I want to make sure that everyone is aware. Now, how do you claim those credits? You have to submit that Public Service Loan Forgiveness Employment Certification form. That is the one and only form for this program. So some people might call it the PSLF application, the PSLF form. It's all one and the same. That form gets signed off by you, the borrower, and it gets signed off by your employer. And I'm going to show you how this Savi tool is going to help you to complete all of that. So don't worry one bit. All right, we can go to the next slide. All right, another thing that I wanted to talk about was the new SAVE plan. This is the latest income-driven repayment plan that was just introduced by the Biden administration and Department of Education this summer. And this plan basically will be the most affordable of all of the income-driven repayment plans out there. All right, now a couple major things about this plan. First and foremost, unpaid interest will be covered. Okay, so regardless of how little you might be paying each month on that loan, and it could be as low as $0 a month, any interest that you accumulate, instead of it being capitalized and tacked onto your principal balance, which happens normally, the government will basically subsidize it going forward in perpetuity. All right, so this is huge. I can certainly sort of attest to how impactful this is going to be as someone who's felt like they've been paying my loans for a decade or more, and the balance is it's not decreased, it's actually increased as a result of capitalized interest. So this is what this plan hopes to sort of reverse. So it is going to subsidize that interest going forward. Also, this new plan will raise the amount of income considered non-discretionary so that no borrower making under 225% of the poverty level will have a student loan payment. That means if you're making about $15 an hour or about $35,000 a year or less, you will be eligible for a $0 monthly payment. And it's sort of a sliding scale from there. So you can think, maybe if you're making 40,000, you might have a $20 payment, right? It sort of works like that. All right. And then next year, so this is what's gone into effect right now. Next year, even more improvements are going into effect. This new plan will basically base the amount of your monthly payment on 5% of your discretionary income instead of the 10% for undergraduate loans. So it's going to help lower that monthly payment even more. And again, if you are trying to set yourself up for public service loan forgiveness, your goal is to minimize your monthly payment to maximize your forgiveness, right? You're not trying to pay off that loan faster. In fact, you want to pay as little as possible towards that loan because you are setting yourself up for forgiveness. All right. Now, Savi supports enrollment in the SAVE plan, and we're going to talk about a little bit later how we can basically help you to determine which of those income-driven repayment plans is going to be best. I'm not going to go into the weeds or details on this webinar, but that's exactly what we're going to help you set yourself up with your Savi technology and your account. All right, we can go to the next slide. All right, last but not least, for any borrowers that might have been in default, especially before the payment pause started, there's a new program called Fresh Start. This program basically brings borrowers immediately back into good standing on their loans, regardless of what you might have been in before, wage garnishment, default, etc. All that it takes is a phone call. So you simply need to verbally initiate this process with your collection agency. So you're going to need to call them and you'll be able to say, hi, I'd like to opt into Fresh Start. It takes about a month to process. And then once it has been processed, you are able to get access to income-driven repayment plans, public service loan forgiveness, even taking out new aid. So for anyone that might have been in default, Fresh Start is going to be sort of your savior right now. Again, especially because it will allow you to get your loans back in good standing in about a month. Normally, the rehabilitation process for federal student loans takes about 9 months, so almost a child's worth. So this is a way to basically get those loans back in good standing right away. All right, then we can keep going. All right, we're going to take another quick pulse check. Let me see what other questions we have come through the chat. Let's see here. All right. Does taking out loans affect your credit score each time you receive a loan? So when it comes to federal student loans, they don't basically do a credit pull when you take out those loans. But having those loans, yes, will obviously impact your credit score. It will be something that is reported to the credit bureaus and be on your credit report. All right. How do I submit the form for my spouse? Is there a field for that? If you're referring to the Public Service Loan Forgiveness Employment Certification form. So your spouse needs to fill that out and they can submit it through Savi, and I'm about to show you how you can set that up with them or for them. All right, what if you completed the PSLF form in the past and you didn't qualify? So I hear this a lot from borrowers. Actually, the rules around the program have expanded and changed quite a bit in the last couple of years. I highly recommend trying to apply again. If you have federal student loans and you've been working for Columbia or another qualifying university, you should qualify, or at least you will be able to get credit for the last 3+ years while payments have been paused. So I highly encourage you to take a look again. And like I said, a lot of borrowers who were rejected the first time are now eligible for the program. All right, how can you know which plan to sign up under? We're going to show you that in just a second. Savi helps you to be able to identify exactly what repayment plan is going to be best for you. All right. We're going to keep chugging along here so we can go to the next slide. All right, great. So, while these federal programs, whether it be income-driven repayment plans or public service loan forgiveness, can be extremely helpful and beneficial. I've known thousands of borrowers that I've worked with for the last 5 years or so that have actually had the remainder of their loan balances completely forgiven, and that's life-changing. However, getting to that point, we understand, is a tough process, especially to do on one's own. There's a lot of forms and paperwork that you need to make sure that you are filling out and also complying with all of the sort of rules and regulations around this program. It's very anxiety inducing. You know, this is a lot of money on the line when it comes to student loan debt. People want to make sure that they're taking the right steps and doing the right things. So there's a lot of sort of bureaucracy involved. It's also hard to figure out what the best option is going to be. You know, are you actually on the lowest repayment plan you could be? A lot of borrowers don't know. And so that's exactly what the Savi tool sort of helps to sort of sift through for you. So how do you make sense of this all? Well, that's exactly where we come in. And that's where I'm going to show you right now how to get started with your Savi account. So we can go to the next slide. All right, so basically through Savi, we're going to ask you some simple questions based on, let's see, your tax filing status, your income, your employment. These are things you're probably going to know off the top of your head. And from there, we're going to be able to tell you your personalized repayment and forgiveness plan, all right, down to basically the cent as to what you're eligible for. We're going to continue to monitor for new programs and policy changes to make sure that all of you are updated on the latest as what's going on. We're going to help you to recertify all of these forms and paperwork yearly. So all of these programs require yearly recertification, which is very annoying, I know, as a borrower. And so we're going to help you to make sure that all of that is completed. Again, sign and submit that paperwork. We're going to monitor it with you to make sure that it achieves the desired outcome. And then last but not least, you are able to receive personalized one-on-one support with student loan experts. These are people like myself who know exactly what they're talking about and who are able to work with you on a daily basis to answer your questions and help you navigate through this process. All right, we can go to the next slide. All right, so here's how to sign up. Hopefully this QR code works. If it does not, we're going to put the link in the chat. I apologize about that. But basically, you can get started by answering two simple questions. That is going to be your annual income and your current student loan payment on a monthly basis, whatever that monthly payment is right now, or whatever it was before the payment pause. All right. So just through those two questions, or I should say, just by answering those two questions, you can put those in there and we can proceed to the next slide. All right, and once you've entered those in, we're going to bring you into the Savi tool and experience. And you can sort of think of it almost like a TurboTax for your student loans, or at least that's the best way I can think to describe it. We're going to ask you some questions about your tax filing status, your family size, your employment. So we can go to the next slide. Great. So these are some of the questions about your income. We can go to the next slide. And then your employment. This one's really important. So this is where we're able to identify any employers that you have worked for, current or previous, that might qualify for this program. So as you can see here, Columbia University, when you start typing it in, that's going to pop up a drop-down menu. You can select your specific school, etc. All of those entities are eligible for public service loan forgiveness. Now, I highly encourage you to add any previous employers you might have had as well. So you can see in this example, someone here has 3 previous employers as well. Right? So again, this program is designed to be retroactive. Any employment from October 2007 to present day is fair game. All right, we can go to the next slide. Now, once you have entered in that employment information, you'll be prompted to register. That's because we're about to go into the loan sync portion, and we're going to want to help you save that information. So you'll be prompted to enter first name, last name, email address. Now, it's really, really important that you register using your uni email. Okay, so you register using your Columbia email address, and I'm going to tell you why in just a second. Because all of these services for Columbia employees are of no cost. So you get the one-on-one counseling, access to those experts, all of the sort of application submission monitoring at absolutely no cost. All right. But if you're a Columbia employee, so that's why registering using your uni email is very important. All right, go to the next slide. There's a two-factor authentication process as part of this. We can go to the next one. All right. And so again, this is probably the most important thing that I can say here today. So all of these services, all of this assistance is absolutely free, thanks to Columbia University, who are investing in this benefit for you all. You just need to make sure to enter your Columbia Uni email address. All right. So when you register, you'll be prompted by the screen you see here. Are you employed by Columbia University, right? Entering in your Columbia work email. All right. And then you'll receive a validation code via email that you're going to enter in, and you'll be all set. You'll have full access to the whole entire suite of Savi services. All right. So it's really important, again, that you register and have that uni email available. All right. We can go to the next slide. Now, finishing on with the Savi process, one of the second to last steps here is syncing your federal student loans. So we provide a loan sync through a technology called Plaid. If you've used Venmo before or anything like that, this is what Plaid does. It basically syncs to or connects your accounts from various financial applications. So it's best in class security. What allows you to do is to select your servicer. So let's say in this case, Navient. You can enter in your Navient username and password credentials, and it's going to sync over a read-only snapshot of that loan data. So it's not giving us access or anything like that. It is simply telling us, okay, this is Lindsay's balance, interest rate, et cetera, things like that, that are going to be important for us in determining your best estimate around repayment and forgiveness, right? And now once you've synced those student loans, we can go on to the next slide. All right. You'll reach the final step, which is the plan options page. And this is where we show you exactly what you are eligible for. So you'll see what that new monthly payment could be, what that total payment over time looks like, how long until you're eligible for forgiveness, I mean, down to the year and month, and exactly how much in forgiveness you're eligible to receive. And you can even see here, we've got the new save plan already built into the tool, so borrowers can simulate exactly what they're going to be eligible for under that plan. And then from there, the next step is basically submitting the application. So you can click continue and go on to the next slide. And this is where we're going to be able to create all of these applications for you. We're going to pre-fill and digitize those forms. On the left-hand side here, you can see we are basically completing those employment certification forms with a click of a button, excuse me, for any previous or current employers you might have had. On the right-hand side, here's an example of that digitized income-driven repayment plan application. Again, we're going to sort of pre-fill that. We send it to you for signature, and then we're going to send it to your servicer, and then we will be on our way. And once those forms get submitted, we can go to the next slide. We are going to monitor them with you every step of the way. So, one of the most frustrating things I find in working with borrowers and as a borrower myself is a lack of transparency and visibility there is into exactly what's going on with your servicer. You might try to call, you'll get a different answer every time after waiting on hours, on hold for 3 hours. You might submit an application and not hear anything back for months at a time and be wondering what's going on. This is a very normal part, unfortunately, of the student debt experience for federal student loans. So we really try to help solve that by monitoring this with you every step of the way. You'll be able to see exactly where you are in the application process, what's been submitted for you on your behalf, et cetera, all to help you really get through this process. All right, we can go to the next slide. And then once you're done, whenever you log back into your Savi account, you're always going to come back to your dashboard. And I put this little red arrow here, right, to see you want to make sure your Savi plan says Savi Essential. If it doesn't, you can click there, and that's where you're going to enter in your Columbia Uni email address. That's going to, again, secure your access to all of the premium features that Savi has to offer at no cost. All right, we can go to the next slide. All right, so again, through that dashboard, you can make sure to sign up for that essential plan. This is going to give you access to all of the features that I just talked about, one-on-one support and counseling, and I'm going to tell you in just a second how you can reach out to our team on that. So it's going to give you access to that, all of the paperwork and form submission. You're going to be able to see your best options. All of that is through the Savi Essential. All right, go to the next slide. All right, and last but not least, our customer service is bar none. So whether you prefer, a sort of online communication, email, etc., you can send our support team a direct message through your Savi account, or you can give us a ring at the number you see there, and we're going to put that number on the screen in just a second here. So we can go to the next screen. All right, so we're wrapping things up here. So what's next? So you want to make sure that you are creating your Savi account using your Columbia University uni email address. Right, that's really important. You're going to complete your application and then reach out for support. You can send us a message through your Savi account or give us a call at the number you see here on your screen, 833-945-0694, weekdays from 9 a.m. to 5 p.m. All right. Well, that wraps up our formal presentation, but I think we got some great questions in the chat, which I'm about to answer now. All right, keep your questions coming. Let's see here. All right, so signing up for the Essential Plan, you're just going to want to make sure that from that Savi dashboard, when you see on the left-hand side your Savi plan, you can click that. It's going to prompt you to enter in your Columbia Uni email address, and that's what you're going to want to do. All right, someone else asked for income. Do I report my own income or my income plus my wife's income? If you file jointly, it's both of your incomes together. All right, so I'm seeing a few questions about family members using Savi. You as the employee obviously can use Savi. Your family members can use it as well. Right from your dashboard, there's actually invite a friends or family feature. So you can actually, when you click that, enter in their email address, they will get an invite email to Savi. They will not get the essential premium services for free, but they will be able to use all the other services. All right, someone asked, will you get switched out of Nelnet if you apply for PSLF? So yes, if you apply for PSLF, your loans are going to move from Nelnet to Mohila. Everyone who is pursuing the PSLF program has their loans with Mohila. It's just sort of the nature of the game. There's nothing you can really do about it. And all the servicers really abide by the same rules. So no one is, I would say, is really better or worse than another. So yeah, many people might be concerned that an income-driven plan might increase payment based on income. So you really got to think about your debt to income ratio, right? So if you have a lower amount of student loan debt, a standard plan might be a lower payment option for you versus someone with a higher debt to income ratio, right? Where it's going to make sense to be on that income-driven repayment plan. All right, my Mohila account says I'm in the Save repayment plan, but my Savi account is giving me instructions to enroll in an IDR plan. Do I just ignore this? So IDR is sort of the umbrella term. Save is a type of IDR plan. So Save is one of the types of IDR. So if you're already enrolled in IDR, then that's perfect. Savi is basically assumes that you're starting from the beginning, right? So it doesn't know that you're already enrolled. So if you're already enrolled, you're good to go. Yes, if you are a Columbia employee, but your daughter isn't, your Savi account can assist your daughter too. But if they're her loans, she's going to want to create her own account. And again, you can invite those friends and family from your dashboard. All right, Hans, you should be seeing an option to enter your Columbia email for an essential plan. If you want to provide me with your email in the chat, I can reach out to you afterwards and make sure that you are all set up. All right, someone else asked, can I consolidate my loans so they include the parent plus loan my husband took out for me? Unfortunately not. So it's just based on loans that are in your name. So that loan is in your husband's name and it has nothing, and unfortunately it cannot be consolidated with your own loans. Yes, Savi is completely free as long as you need it for just 1 year or beyond that. Someone else asked, can you help me troubleshoot issues with an employer not filling out an employment certification form? Absolutely, Annabelle. Yes. Please reach out to our support team. All right, Hans, we are definitely going to reach out to you. It sounds like you might be having some technical issues. I apologize about that. So I'll be reaching out to you after today's webinar. All right. All right, a few more questions here. So someone else, I'm a PhD student working for Columbia University for 5 years. Would I be able to use the 5 years towards public service loan forgiveness? So if the loans were in school deferment, but I did make payments, unfortunately, this is one of those annoying things about the student loan system. Because they were in an in-school deferment status, that time does not count. Now, I will say this, we have been lobbying very hard to, with the Department of Education to try and get any in-school deferment time counted. So not to say I'm optimistic that at some point it could count, but unfortunately, just being in that status, regardless of if you made payments, and I know how annoying this is, unfortunately does not count. All right, someone else asked if I submitted my PSLF form myself, can Savi help get the paperwork through even if they didn't initiate the initial submission? Absolutely, absolutely, yeah. All right, another person asked, do I still qualify for PSLF without enrolling in any IDR, or is it mandatory? So right now you can actually still qualify without enrolling in an IDR. But going forward in the future, it will become mandatory. But any past payments that you made that might not have been on an IDR are eligible. Yes. So someone is asking about if you have an option of less than 10K in loans. So this is original principal balance. You are able to have that forgiven after 10 years instead of the 20 to 25 under the IDR program. That is an aspect of SAVE that goes into effect next year. All right. If I wait to enroll in PSLF, are any past payments while working at the university still eligible? Yes. Anything going back to October 2007. Do forbearance periods count? So starting next year, they're going to be doing something called the one-time account adjustment, and those periods are going to start to count. All right, I realized there might have been an issue with the QR code. Catherine, when we're going to be sending out an official link to all of you guys. I apologize about that. So just stay tuned here with us. We're going to make sure that everyone has the correct link going forward.
Okay. That sounds good. Yes, I can look out for that. Help with anything that's needed. But this was all really good. Thank you very much for doing this.
Of course, any other questions?
Yeah, I was just following along and everything, but yeah, you did a great job with answering all the questions and everything. I think it was a good presentation. Mm. Mm.
All right. We will give you all back a few minutes of your day, but I appreciate the feedback. Thank you so much.
Okay, thank you all. Thanks so much.